Good morning, and welcome to our rolling coverage of business, the financial markets, and the world economy. Today, we're diving into the UK employment market, which is showing some promising signs for job seekers. The latest study reveals an upturn in pay and a ray of hope for those looking for work. But what does this mean for the economy, and what are the implications for the Bank of England's Monetary Policy Committee? Let's break it down. One thing that immediately stands out is the acceleration in wage growth. According to the study, wage growth has reached its strongest level since January, and the permanent salaries index is above the 52.3 average seen in 2025. This suggests that there has been no slowdown in pay growth over the past 18 months. But what makes this really interesting is the context. The study also notes that vacancy growth is recovering and staff availability is high, but easing slightly. This points to a labor market that is beginning to steady, which is a positive sign for job seekers. Now, let's talk about the implications for the Bank of England's Monetary Policy Committee. Rising employment and wage gains could suggest that the committee needs to be cautious. But here's where things get interesting. The study also mentions the possibility of a Burnham bounce, which could impact the sentiment. The drop in temporary hiring and rise in permanent hiring in July, usually a sign of falling uncertainty, sits oddly with the resumption of hostilities in the Middle East. So, while the data is encouraging, it's not without its complexities. From my perspective, what this really suggests is that the UK employment market is a delicate balance of factors. On one hand, we have rising employment and wage gains, which are positive signs for job seekers. But on the other hand, we have the potential for a Burnham bounce and the ongoing uncertainty in the Middle East. This raises a deeper question. How can we ensure that the labor market remains stable and supportive for job seekers, despite these complexities? One thing that many people don't realize is the impact of temporary work on the overall labor market. The study notes that temporary vacancies are up for the first time in 2 years, and recruiters' revenue from supplying temporary workers has risen for a fourth consecutive month. This suggests that temporary work is becoming an increasingly important part of the labor market and that employers are looking for flexible approaches. But what this really implies is that the traditional job market is evolving and that we need to adapt our understanding of the labor market to reflect this. In my opinion, the UK employment market is a fascinating example of how the labor market is changing. While the data is encouraging, it's not without its complexities. The rise in temporary work and the potential for a Burnham bounce are just two of the factors that are shaping the labor market. As we move forward, it will be important to continue monitoring these trends and adapting our understanding of the labor market to reflect the changing landscape. Because in the end, what this really suggests is that the labor market is a dynamic and evolving system, and that we need to be prepared to adapt to the challenges and opportunities that arise.